Guys, so this is what is called SMT divergence, and this is GU. You see GU is making lower low and EU is making lower high. Why are we looking at these two pairs? Because these two pairs are positively correlated. That means if GU is making lower low, EU is supposed to make lower low, and if GU is making higher high, EU is supposed to make higher high. But in this case, we see GU making lower low, but EU is making higher high, which tells us that there is a crack in correlation, and this is called SMT divergence. But if you are going to compare it with the dollar, let's say DXY, the dollar index, we see that the dollar index is making higher low, which is they are negatively correlated. If dollar is making higher low, GU or EU is supposed to make lower high. But in this case, we see a crack in correlation in the GU, that GU is making what? It's making lower low instead of lower high. So this is to tell us that there is involvement of what? Smart money technique or the institution in the market. And if we are going to be trading this, you have to be very careful to understand your bias, because sometimes you will see this smart money technique and price will go otherwise. But in this case, we see there is a break of market structure at this level, which is trying to tell us that there is a tendency that price is going to retrace back into the range. Moreover, today is Friday. We're expecting price to come back into the range. So let me know in the comment section what you think about smart money divergence.